Thanks for watching the closing cost segment that we're going to do for you right now. As you know, you may have seen Kimberly before in videos, and myself, Mark Taylor. We wanted to explain the confusion that is rampant right now in the mortgage place regarding what your closing costs are going to need to be, what your down payment will be, where consumers are afraid to ask for closing costs when trying to purchase a property. So I brought Kimberly in with me today so we can talk back and forth and explain to you some of the frustrations that you might be exposed to and that we're exposed to, because I want everyone to understand, watching this video clip, it is our objective to always get you into your new home with a minimum down payment and the minimum out-of-pocket costs. And obviously that translates into the lowest house payment possible. So Kim, we have a lot of consumers that get frustrated, and real estate partners, when we ask them to ask the seller for closing cost participation. In years past, it wasn't very common for a seller to help a buyer with closing costs. Now, as you and I know, HUD says that 3 out of 5 consumers require some form of closing cost assistance. With the new FHA rules changing, where consumers are going to have to keep 2 months reserves, 2 months of their new mortgage payment in the bank account when they close, it's ever so more important for the seller to participate by paying the closing costs. Closing costs are tax deductible on behalf of the buyer if the seller pays them. Is that not right?
Correct.
So whilst it can be an extra step for buyers to go through for asking for closing costs, it is a benefit to them, right?
It's imperative. I find it so very important that real estate agents work on behalf of the buyers to get as much as possible from the seller, especially in this market, towards their closing. Buyers are scrumming together every penny that they can to get into the house as it is, and that extra step, that extra concession from the seller is so important to them being able to close. And real estate agents, for some reason, are stuck on 3%. They're stuck on that being the maximum amount that we can ask for. On a $100,000 loan, that's $3,000. That's not going to get the consumer in without an out-of-pocket cost.
So on a $100,000 loan, what is a normal customary closing cost amount?
I tell people that in this market you can expect to have a minimal amount between closing costs and upfront taxes and homeowners insurance prepaids, that it's going to run between $5,000 and $6,000.
And is that because loans have become more expensive these days?
Absolutely.
Now, what about the occasion when a consumer goes out and buys a short sale or an REO, a real estate owned or foreclosed property that a bank owns? Are there more closing costs associated with that type of transaction?
Bank-owned properties are going to run, probably at least $1,000 to $1,500 more than a standard resale, because of the relationship that the bank has with the title companies. They have set fees, they have set escrow fees, and set lender policies, which are 15 to 20% higher than standard resale fees.
Okay.
Consumers don't understand that.
And a lot of agents don't understand.
A lot of agents don't understand that. They don't realize that you're buying an REO, you're looking at $1,500 more in closing costs just because it's an REO.
Now, for those of you listening to this, it might cause even more confusion when we talk about real estate owned or bank owned property having more closing costs. The reason that they have more closing costs is that when you go and purchase a real estate owned property, they will offer to pay $5,000 towards your closing costs, which is the number that we've said would be sufficient for you to pay all of your closing costs, everything that you needed to pay for except your down payment, which is either 3.5% for FHA, 5, 10, or 15% for conventional. Our goal is to only have you close with your down payment. What a real estate owned property will typically do is say, yes, we'll pay $5,000 towards your closing, but out of that $5,000, we want you to also pay our legal portion of title fees.
Right.
When you close on a home, you have a buyer title portion and a seller title portion. It is the seller's requirement to pay that title fee. On bank-owned properties, they won't pay it. They take it out of your concession. They'll typically ask the realtor to ask for a home warranty.
Yep.
They'll agree to pay it out of the $5,000.
Right.
So if we only ask for the minimum amount of closing costs, the bank starts to whittle away at what you need to pay for your appraisal, your doc prep, your closing, your title, your escrow, your insurance, your impounds.
Your processing, your underwriting, your origination. I mean, the fees are standard on every single transaction, and what I try to encourage consumers to understand, and especially real estate agents to understand, is that The fees aren't going to change. They're going to stay the same no matter who you're talking to or what, hopefully, licensed loan officer is quoting you things. They're not going to change. Your taxes are going to be what your taxes are. Your homeowner's insurance is going to be what quote you chose. The title company, 9 times out of 10, is going to be seller selected, and the fees are going to be higher than normal. Those fees aren't going to change, and they're pretty standard throughout the business. They're going to run $5,000 to $6,000 on a $100,000 purchase, and $7,000 to $8,000 on a $200,000 purchase.
But why do consumers on an $80,000 loan go, ooh, $5,000, that's an awful lot of money, yet on a $200,000 loan it's only $6,500 or $7,000 roughly? Why is a lower priced home seem so much more expensive?
Well, because it's a lower priced home. They automatically assume I'm only buying a $100,000 house. Why is my cost 5%?
Because we have static costs. A $450 appraisal
right.
on an $80,000, correct.
Fees that don't change. You have underwriting fees, processing fees, appraisal fees, escrow fees, and policies that don't change based off of loan amount. They are standard, and they're going to run you that no matter how big of a house or how small of a house you buy.
So let's say we ask for $5,000 and the closing costs come to $6,000. Is it reasonable to assume that the borrower has a couple of actions they can take? One, they can come out of pocket with more money, bearing in mind that getting closing costs is kind of like an extra benefit.
Right.
It's kind of like icing on the cake. It isn't really normal.
Right.
But working with a team like us, we try and get them all the time.
Always.
What other options does a buyer have if there are no more concessions available to pay all of their closing costs? What other options can we suggest to the buyer?
Well, we can always offer the consumer the ability to cover some of their costs for them. For us to be able to do that, we have to increase their interest rate to make up for whatever portion of their costs that they want us to help them with. Now, increasing the rate doesn't give us a lot of money. I mean, we can increase the rate by 1/4%, and let's say that gives us $700 or $800 to work with to help them cover some of their costs if they're
But 1/4 of a point only gets $700 or $800. I remember 2 years ago where it would get twice that. What's changed?
Well, what's changed is interest rates and the mortgage business in itself.
So it's become more costly for consumers.
It's become more costly across the board. For us, for the consumer, for the agents, it's become a more expensive business.
Okay. So raising the interest rate, we would, as a team, when we take that option, we always sit down with the consumer and say, look, we're getting you an extra $1,000, but this is what it means on a monthly basis. Would you rather have the lower rate and come in with the extra money, or would you rather go and borrow the money as in form of a gift from friends or family?
Which, on that point alone, I think it's absolutely wonderful that we're in a market that allows us to get a gift. You're actually able, that's a wonderful thing about FHA, is that you're actually able to go to a close family member and say, can you give me, this extra $1,000 to help assist in buying this house? I think that's a wonderful ability within the guidelines, is to get that gift, because if you weren't able to get that gift, you wouldn't be able to buy the house. And I would say 50% of the transactions that we close are gift funds.
Right.
People that are getting assistance from somebody close to them to help them get into their home.